Thank you so much. Good morning. Good morning. It's indeed challenging time, and if it's only to try to physically come from Paris to Frankfurt with strikes on both sides of the journey. CCP supervision in challenging times. I mean, we already heard in the introductory words about the challenging period we are facing. Actually, last year when I was speaking here, we were still trying to comprehend the fallout of the Russian aggression in Ukraine and the impact on energy products and commodities more broadly. We are also, at that point, seeing the increasing concerns regarding inflation, which has not abated. The situation was extremely volatile, and we saw quite severe events that were not really on the radar, like the trading halt in nickel at the London Metal Exchange. Unfortunately, we are still facing a highly volatile environment, and the recent events in the US and in Switzerland clearly give evidence to this. We are facing a very challenging outlook, with continued pressures to energy markets and more generally financial markets, as investors still grapple with the effects of multi-policy changes on their investment strategies and own funds requirements. Over the past year, ESMA and the CCP Supervisory Committee have been forced to position themselves in such a challenging environment, and I hope we have proven to be very agile here. For instance, we set up at very short notice an enhanced monitoring system for CCPs, and we proposed emergency changes to the collateral requirements for non-financial companies. They were drafted and enacted in less than 4 weeks. I think we managed to set some form of record here in EU legislation, and it's good to see that it can be done if there is a need. Another example is the MCM, the market correction mechanism as it is called. Let me not dwell on the merits of this mechanism as such. ESMA has been publicly stating its views on this, but within 1 month of the decision by the energy ministers to impose a price cap on the TTF gas futures, ESMA provided a comprehensive assessment on the expected impact on CCPs and on the clearing ecosystem. Of course, currently, given the price levels, we don't see any immediate noticeable effect, but it's also clear that market participants will not wait for a price cap to kick in. We anticipate evasive actions if prices move closer to the limits set. So, while ESMA demonstrated an ability to react under strong pressures, the past year and also the past weeks have put a spotlight on weaknesses and on dark spots in certain areas of our regulatory and supervisory system. This calls for expanding the strength of what I would call the supervised core financial system, vertically down the client clearing chain, but also horizontally to markets which up until now have gathered less regulatory attention, such as commodities, but also crypto. The current EMIR discussions, which have just started, are a potential opportunity to address these issues. Let me focus on some key aspects in this regard. The COVID crisis had already highlighted concerns as regards the potential procyclical behavior of CCP margin models and the preparedness of clearing participants to face big margin calls. As you are aware, ESMA launched last year a consultation to look into the existing anti-procyclicality tools under EMIR. We had to conduct additional analysis in view of the live stress events that we faced to make sure that our considerations and findings are adequate, and we hope to be able to finalize our work on this before the summer. However, the procyclicality of certain CCP margin models is only a part of the issue. Clearing members are exposed to margin calls, and this, in turn, will be passed on to their clients, further adding to liquidity strains on the wider clearing ecosystem. The extent of such calls may not always be too transparent to the clients. CCPs are already required to offer margin simulation tools to their direct clearing members. This is enshrined in the EMIR refit. But the Commission's EMIR 3 proposal proposes that this information should be passed on to by clearing members to clients, which may have fewer available liquid resources and therefore need to be able to anticipate large margin calls. Global standard setting bodies are conducting currently work on margin responsiveness and transparency to cater for considerations around the anticyclicality metrics and margin simulation tools. ESMA is heavily invested in this work, and we are committed to see this work to completion by the end of this year. In this context, the EMIR 3 discussions may also be a good opportunity to ensure that ESMA has the power to consistently implement the conclusions of the international work streams to ensure that information provided by both CCPs and clearing members on margins is sufficiently transparent, granular, and comparable. But also looking at the horizontal side, the Commission has also made proposals to address certain specificities in the field of commodities, in particular the direct participation of non-financial companies to CCPs. We consider that the Commission has suggested a balanced approach concerning the margin requirements and default fund contributions, including in stressed market conditions. And we also welcome the prohibition to offer client clearing services by non-financial entities. We welcome the proposed mandate for ESMA to further define what is expected in terms of admission criteria and ongoing membership requirements to consistently strengthen the resilience of clearing members regardless of the type of counterparties. The Commission also clarifies in the EMIR 3 proposal that CCPs which offer clearing in both financial instruments and non-financial contracts should be subject to EMIR requirements in their entirety. Similar activities carry similar risks and should be subject to similar treatment. Therefore, ESMA welcomes the extension of CCP requirements to all non-financial contracts such as forwards on certain commodities or novel asset classes such as crypto, regardless of whether a CCP also clears financial instruments or not. Finally, the Commission also has suggested improvements on reporting requirements. Throughout the energy crisis, in particular in March and August last year, the EU and national authorities were not always able to identify comprehensively exposures across clearing members, clients, but also subsidiaries of a group based in a member state different from the one where the trading arm is based. The MCM regulation put further spotlight on these issues. The Council required that ESMA regulatory monitors and assesses the potential impact of the mechanism on CCPs. To do so, ESMA has to rely on voluntary data submitted by EU CCPs and transmitted by national authorities. EMIR reporting only covers transaction data and not information on CCP risk management. We need to enhance reporting to enable a comprehensive, consistent, and EU-wide monitoring and assessment of the buildup of risks. As you may expect, I cannot do a keynote speech without a few words on the improvements proposed by the Commission in respect of the EU CCP supervisory system. I fully concur with the Commission that the introduction of clear and efficient supervisory processes is essential to ensure a fast time to market so that EU CCPs are able to compete globally. We still see CCPs waiting months, if not more than a year, for national authorities to declare completeness on applications. We believe that the Commission proposals to introduce maximum deadlines for national authorities and to run processes on the side of national authorities, ESMA, and colleges in parallel will help to win valuable time. Moreover, the proposed procedure for non-objection, which aims to simplify the approval processes for non-material or non-significant changes in CCPs, is also welcome, as long as there is a clear definition of what is non-material or non-significant. as this would otherwise increase supervisory divergence across the EU. And I do not say this lightly. Supervisory divergence across EU authorities remains a critical issue. The same issues are coming up time after time. Some CCPs benefit from catch-all authorizations. Some CCPs are allowed to outsource certain activities without approval, and EMIR compliance of CCPs is still assessed in very different ways across the member states. The Commission proposals in these matters are vital. Extending the scope of the CCP Supervisory Committee's mandate and strengthening the tools for supervisory convergence, in particular, to make sure that national authorities have to justify deviations from agreed supervisory approaches, a comply or explain approach. Last but not least, the proposal to increase the role of ESMA in colleges would go a long way in enhancing consistency, as ESMA is the only authority which is participating in all EU colleges. While some of these measures may be controversial, they would be essential steps towards a strengthened and consistent supervision of EU CCPs, in particular if, as a result of the measures proposed to reduce exposure levels to UK CCPs, EU CCPs will have to manage higher levels of systemic risks. However, there are a few areas which are not sufficiently covered in the Commission proposal. This relates to potential additional powers of ESMA to address crisis situations, something we have been calling for again and again over the last 2 years. And also in respect of UK CCPs to have a closer look at recovery and resolution, but also at the regime for comparable compliance, in particular if the Tier 2 CCPs remain of systemic importance in certain areas. Let me conclude with taking a look at the global dimensions of CCPs and the need for regulatory cooperation. Cross-border cooperation requires high level of trust, transparency, and coordination amongst partner jurisdictions. The need for sharing information and cooperation on matters of legitimate interests also exists with non-EU jurisdictions, in particular where exposures for EU participants and markets are high. ESMA stands ready to work on the basis of global best practice, such as cooperation arrangements to improve the exchange of information, to better identify emerging risks, and to coordinate adequate responses. Over the past years, we have developed a robust relationship with the Bank of England, and we believe we can further deepen this cooperation, in particular in the field of crisis management. We have also engaged with a high number of other supervisors in the context of the third country recognitions of CCPs. Of course, current geopolitics do not help, and nevertheless, we are proud to say that ESMA has concluded now 25 email-compliant Memoranda of Understanding with authorities across the globe, including brand new ones with Chile, China, Colombia, Malaysia, Taiwan, and most recently Israel. We are covering 39 third country CCPs, which are currently recognized by ESMA. Where there is a common interest, there is a way for cooperation. And we are glad to see that trust and cooperation is the way chosen by the vast majority of supervisors across the globe. With this, let me conclude, and I thank you very much for your attention.